Good morning, this is Tom Aspray with the Viper Alert Market Wrap video for the week ending November 4th. You look at these performance numbers for the week and you'd probably be surprised that I'm quite encouraged about the market here, and I think the action the first 3 days of the week will be important. I'm working on a Forbes article that addresses it in more detail, but let's look at some of these numbers. About the only thing good you can say is that the Dow Industrials, which we've been showing has positive relative performance, was the best performer of the equity indices, just down 1.4% in contrast to the 6% drop in the Nasdaq. 3.25, 3.3 on the S&P. The transports did pretty well, under 1%. Utilities under 1%. Gold was actually up 2%, and the small caps didn't do as well as I thought they might. They were down 2.5%. So let's look at some charts. So the weekly chart shows that we hit the declining 20-day EMA here, and we're not able to close back above it. We did settle just above the new monthly pivot, so that's a slight positive. Below here, the overall breadth was slightly negative, but last week, but improved obviously with Friday's strong numbers and strong close. So we dropped back below the moving average. I've been doing this advanced decline analysis for decades, and you don't see that many weekly turns typically. I haven't gone back past the 80s recently to determine how often it happens, but not very often. And of course in the 80s we only had the data for the NYSE. So obviously this makes it clear that next week's data will be important. You get a strong close and positive numbers, it'll support the bottoming scenario. We did get pretty close to the weekly target from the flag formation, and there's some other positives out there we'll show you now. Of course, on Friday, many of us thought that we needed to see a much weaker jobs number to get stocks going, but once again, things keyed off interest rates. We'll be looking at it shortly. The daily charts on most of the markets do suggest that was a pullback in an uptrend. You can see the NYSE just came back to its rising 20-period moving average. Closed higher, did form a doji, so a little indecision here. The AD line is turned up from its moving average. McClellan oscillator here is held above the zero line. Similar sort of pattern in the DIA, which tracks the Dow Jones Industrial. You can see much more positive formation here. The relative performance, we noticed that it completed its bottom here, in early October, and it's been the stellar performer. I think it's outperformed the S&P by about 7%, since that signal. Of course, the QQQs have been the dog, but even the AD line there flipped back above this moving average. It got down to monthly pivot support, which comes in, at 259.54. The low, I think, on Friday was 259.08. So pretty good risk parameter down there. Obviously, we got to get above this high here at 284.60 to complete this bottom formation. As I wrote about last week in Forbes, I've been watching the 2-year yield. It's the most sensitive. I think we had a target right around the high on Friday of 4.78%. You can see we closed a little lower here after that high, so could be a top here. Of course, we need to see a sharply lower close early in the week, likely below that was Wednesday's low, which would have been 4.452%. That would support the fact that yields have topped out in here. That's consistent with the MACD analysis here. A big divergence at the highs, a secondary, another divergence here. However, if yields stay higher early in the week, this could flip at least one of the MACDs back to positive. You can see this purple line is the SPY. So you can see that it, turned up, as yields turned down, which is what I'm expecting to see. So that's what we saw, in June, for a bottoming process in the stock market, and also in August for the top. The 10-year yield did not rise as much last week, which is not unexpected to see this pop, after the FOMC here. So It also looks toppy still, but obviously it needs a drop back, first of all below the 20 period X minutes moving average. That's a yield of 4.015. So that's kind of thing. If you get below 3.912, that'd be further confirmation. So I think that is the likely scenario, but as I said, we should know if by the middle of the week, I would think. The high-low analysis, it continues to suggest we saw a bottom. You can see that we got a surge in new highs here as we were retesting the lows. Lower number of stocks making new lows, so that's encouraging here. Obviously, we want to see on a further rally, we'd like to see in the NASDAQ get above this. I think it was about 135, 140 level. On the NYSE, similar sort of formation here. Nice surge in new highs on Friday. New lows are staying pretty down there. If it got back above 600 new lows, that would be a negative sign. The NYSE high-low or NYSE advanced minus decline oscillator has turned up from moderate neutral levels, I would say. 225. It looks like it could, on positive numbers early in the week, which is what's needed to support the bullish case, you could see that it get easily back to overbought levels. For those students of the advanced decline line, this is the NYSE all. Looks to be a potential reverse head and shoulder bottom, left shoulder, head, right shoulder. So if we get a strong day of breadth and we get above this neckline, that'll be quite an encouraging sign for the market and should propel the NYSE back at least to the 16,000 level. Sentiment numbers seem to be improving. You can see the percentage bullish is trying to bottom. A little more conviction on investors, a little more positive. A lot of those in the bearish camp move to neutral. And below this, we see the NAIM equity exposure has gotten above that 50 level again. So now you need to see, a move above this peak, which was just under 80. It's reported on Thursday to suggest that, okay, investment active managers are getting back into the market, which they have not been for a while. It was another big week for value. Remember, this is the ratio of growth to value. So when it's declining, like it was here, we had this rebound back into the August. So that was growth was outperforming here. Value's taken back over, and completed this major trading range. However, on a short-term basis, it does look like it's getting a little oversold here. So we could see a momentary blip back up in growth. In fact, some of the positive action and even something like the SMH, the semiconductors, don't think it may be a quick trade, but that suggests that growth has been hammered down too much, at least for the short term. I've been including a few more of these hourly charts from stock charts. I really like them. Not only that, they give the levels, so that's why prior to Thursday's open for ETF traders, we lowered our second buy level here. We got in at about 370 and change. We got down to 378.79, but appear to be forming a bottom here, a secondary test of 370. So we get above this 378.87 level. That should be a sign that this pullback is over and that we're going to challenge the 390 to 39 area. That is consistent with the 260 futures analysis. You can see we started the week long. It flipped back to positive a week ago Friday. Hit the first target here at 38.97. Fell just short of the second target and went short, which turned out to be a pretty good trade here at 38.70.75. And then we managed to hit the targets at 38.28, 37.75, 37.30. We got down to 37.04 here and tried to bottom out, flipping back to positive on Friday, an approximate entry price of around the close at 37.72. We'll know when prices open in Asia about 6 p.m. today. what the actual entry. Tentative stochastic confirmer is bottoming, but its moving average is still declining. Volume is still negative here, so it's got to prove itself on the upside. You can see the pivot levels, and I think you've probably been enjoying these gray levels in here that are the midpoints. You can see that right up in here last week it got above the mid-pep. In fact, I talked to Jerry, who's out of town. He said when he sees this, he uses the midpoint as a target instead of that level up there, which of course would have worked perfectly because the high was 39.28, the midpoint was 39.16, and the target was at 39.30, which was not hit. As always, please send me your questions and comments. I really do appreciate them. One question I've been getting lately from some of you who are not ETF or stock subscribers is what positions we have. So this is our current positions as of Friday's close in ETFs. Investor positions are in you can see a combination of XLP and VFH. I like that financial better than the XLF. It's broader. Did that near the lows. You can see we the 17th of October is when we put those on. We're in XOP. I discussed last time it was really a tough using a stop. It was trading around 150 and it only stopped with like 142.30. We had a pretty good entry at 137.05, so I took the option of reducing the position size, obviously the way we closed and the way it looks, but we took a profit there, so that's good. And also in the Spider SPY, two positions, an average price of 373.93, so it's up a little bit. And this is a small cap one I've been watching, SPSM, so it's also looks well positioned. As for stock traders, we've got quite a few positions on here. Most of them are doing moderately well. Campbell Soup, we took some profits on there, and we added it back in on the pullback. Too early to tell whether that's going to be a good move or not. Marathon, we hold on to our long position. It's really doing well. DK, CBOE, recent additions here. You can see just at the end of the month, and then on Chesapeake and CBOE, also pretty recent additions. Stericycle, it triggered a weekly doji buy signal, so it was a little hair raising in the middle of last week, but closed really strong, already up 8% from Monday's and Tuesday's entry. So that's the numbers we like to see. Needless to say, it's likely to be another crazy week. Of course, we have the election day on Tuesday, and then we get a bunch of key data Thursday, CPI, core CPI, etc. So if I'm right about interest rates, maybe you'll see a little softening in the CPI, and it will help rates move lower rather than higher, which is what the stock market needs. And then on Friday, we get the consumer sentiment, which will be an interesting read, looking at their inflation expectations. So great. Looking forward to a prosperous week, and thank you very much for tuning in.